Welcome back to the channel. Today we're diving into Meta Platform's latest earnings results and what they mean for the future of social media and AI-driven advertising. With the stock trading near all-time highs and analysts revising their targets, there's a lot for Meta investors to unpack. Before we dig into the numbers, please like this video and subscribe for more institutional-grade market analysis. Let's get into Meta. We begin with Meta's current standing on the Nasdaq. As of the latest session, Meta is trading at $652.53, down slightly by 0.18% on the day. The 52-week range is impressive, running from a low of $479 to a high of $796. The stock is currently positioned in the upper middle of its yearly range, reflecting strong investor confidence, but also some recent consolidation. With a massive trading volume of over 11 million shares, the liquidity and interest in this tech giant remain robust. This snapshot provides the necessary context before we move into the underlying earnings data that will determine whether Meta can push back toward its highs or if a deeper correction is on the horizon. The earnings per share chart highlights Meta's consistent profitability and recent acceleration. In the first 3 quarters of 2025, the company delivered steady beat results, with reported EPS figures comfortably exceeding estimates. The standout performance came in the fourth quarter of 2025, where Meta reported an EPS of $8.88 against an estimate of $8.21. This significant beat underscores the company's operational efficiency and the success of its AI investments in driving ad revenue. Looking ahead to 2026, the forecast bars show a slight dip in the first quarter, which is seasonally typical, followed by a steady climb back toward the $8 range by the end of the year. This trajectory suggests that analysts expect Meta to maintain its high level of earnings power, even as it continues to invest heavily in its reality labs and AI infrastructure. The quarterly earnings surprise table puts hard numbers to that performance. For the December 2025 quarter, Meta delivered an EPS of 8.88 versus a consensus of 8.21, resulting in an 8.16% positive surprise. The prior quarters were even more impressive, with September 2025 showing a 9.68% surprise and June 2025 delivering a massive 22.47% beat. The March 2025 quarter also saw a strong 23.18% surprise. This streak of double-digit and high single-digit beats is a hallmark of a company that is executing flawlessly. For investors, this consistent ability to outperform analyst models is a key driver of the stock's premium valuation. It forces analysts to continuously revise their estimates upward, creating a tailwind for the share price. The question now is whether this momentum can be sustained into 2026. Looking ahead to 2026, the quarterly earnings forecast table outlines analyst expectations for the next 4 quarters. For the quarter ending March 2026, the consensus EPS forecast is 6.67, based on 16 estimates. The sentiment here is mixed but leaning positive, with 9 upward revisions in the last 4 weeks against only 2 downward moves. As we progress through the year, the consensus rises to 7.16 in June, 7.16 in September, and peaks at 8.67 in December 2026. The high-end forecasts are even more bullish, with some analysts calling for nearly $10 per share by year-end. The strong number of upward revisions, particularly for the March and June quarters, indicates that the professional community is growing more confident in Meta's near-term outlook. This positive revision momentum is a strong signal that the market believes the company's efficiency gains are sustainable. The yearly earnings forecast extends this growth story over the next several years. For the fiscal year ending December 2026, 19 analysts have converged on a consensus EPS of 29.66. Looking further out, the growth is projected to continue its upward march, 33.78 for 2027 and nearly $40 per share by 2028. This represents a steady double-digit compound annual growth rate in earnings. The revision data for 2026 shows 4 upward revisions and 11 downward revisions in the last month, suggesting some near-term caution or recalibration among analysts despite the overall bullish trend. However, the long-term trajectory remains clear. Wall Street expects Meta to continue compounding its earnings power significantly as it monetizes its AI tools and maintains its dominance in social advertising. The high-end estimate of over $50 per share by 2029 highlights the massive potential upside if execution remains perfect. The change in consensus chart visually tracks the stability of analyst expectations. For both the full fiscal year 2026 and the upcoming March quarter, the bars remain relatively flat when comparing 1 month ago to the current levels. There is a slight visible uptick in the current bar for the fiscal year, reflecting the net impact of recent revisions. This stability suggests that the market has largely priced in the current growth trajectory and is waiting for the next catalyst to drive a major shift in expectations. While there isn't a dramatic surge in estimates right now, the lack of a significant drop-off is also a positive sign. It indicates that the consensus view is holding firm, providing a solid floor for the stock. Investors should watch for any breakout in these bars in future updates, as that would signal a new phase of analyst conviction. The estimate momentum text summary provides the precise detail behind these shifts. For the fiscal quarter ending March 2026, the consensus EPS forecast has remained stable at 6.67 over the past week, with a slight increase from 6.65 a month ago. This 0.3% increase is small but positive. However, for the full fiscal year ending December 2026, there has been a slight downward adjustment, with the consensus forecast dipping from 30.26 to 29.67 over the past month, a decrease of nearly 2%. The summary notes that 4 analysts raised their forecasts, while 11 lowered them for the full year. This divergence, positive momentum for the near term but slight caution for the full year, suggests that analysts are fine-tuning their models to account for potential macroeconomic headwinds or increased capital expenditures later in the year. It's a nuance that savvy investors should keep in mind. Finally, we look at the raw tally of the number of estimates changed. The table shows a clear split in sentiment. For the March 2026 quarter, bulls are in control, with 9 upward revisions against only 2 downward moves. This signals strong confidence in the immediate quarter. However, for the full 2026 fiscal year, the picture flips, with 11 downward revisions against 4 upward moves. This suggests that while analysts are optimistic about the very near term, they are becoming more conservative about the back half of the year. This dichotomy creates a prove-it scenario for meta management. If they can deliver a strong Q1 and guide effectively for the rest of the year, they could force those 11 cautious analysts to reverse course and upgrade their full-year targets. For investors, this tally highlights the importance of the next earnings call in setting the tone for the rest of 2026. In conclusion, Meta's latest earnings profile shows a company operating at a very high level of efficiency with strong near-term momentum, but some emerging caution for the full year. The consistent earnings beats and robust quarterly forecasts provide a strong foundation, while the long-term projections point to significant value creation through 2028. The divergence in analyst revisions suggests that the next few months will be critical for determining the stock's trajectory. Thank you for joining us for this deep dive. Don't forget to like, subscribe, and hit the notification bell so you never miss an update on Meta and the broader tech sector. We'll see you in the next analysis.